Good morning, I'm James Baggett, founder of Car Dealer Magazine, and today I'm chatting to Robert Forrester, CEO of Vertu Motors, on their results day. Good morning, Robert.
Morning.
Nice to see you.
Good to see you.
Really enjoyed reading some positive news this morning from yourself. One of the highlights in there that I spotted was the growth plan. Clearly, we're in a very difficult stage for the motor industry at the moment, but you've identified some opportunities. Can you just talk me through those?
I think there's plenty of opportunities, if I'm honest. We've set out a 5-point strategy, which isn't any different than before the pandemic, if I'm honest. It'll just accelerate probably. One of the pillars is obviously to grow ancillary businesses. You saw us do that with the acquisitions of Ace Parts and Vans Direct. So I think they're definite growth opportunities. And both those businesses have performed exceptionally well during the lockdown, being online businesses predominantly. But I think in terms of franchise dealerships, I think we've got a strong group with a very stable, experienced management team with excellent systems, in-house software capability, which is accelerating, pushing through omnichannel retailing, and also productivity and efficiency increases. And I think they can operate over a broader, larger platform. So I suspect we're going to see two dynamics. One, the number of sales outlets in the UK reduce, so we should therefore be relatively bigger as a consequence. And two, clearly I think we've got the ability to look at growth in terms of increasing the number of outlets, and our views on brand and scale is that we can get scale economies, and having strong brands that we can go to market with digitally on the TV is of paramount importance.
Is there any areas in particular, I mean, geographically, that you're thinking of where you need more representation or would like more representation?
No, I mean, as a business, we go from Glasgow to Fife to Kent to Devon. We're pretty agnostic, actually, in terms of geographies, apart from the fact we do like having dealerships where there's lots of people. Sheep aren't great areas, are they, for car selling? So I think we're relatively confident that we can operate in a variety of different geographies as long as there's demand and scale.
And do you think this turbulent time for the motor industry is going to present you some opportunities to pounce in the acquisition role?
I think there will be some opportunities for sure. I think there are varying levels of balance sheet strength, and I think the manufacturers will be quite active in terms of restructuring networks, taking down the number of sales outlets. So I think there will be opportunities for us. We're clearly at the moment in cash conservation mode, as every business is, but the balance sheet is strong. It has ability. We've never been great advocates of taking high levels of debt on ever since our formation, and that puts us in a good position. And actually, with levels of uncertainty, I don't think we'd be looking for lots of debt at the moment, but we are ambitious to grow the business, and we always have been. And if you look back in, the great financial crisis, that period was the making of our company. I mean, we only we bought our first dealership in March 2007, and if you look at where we are today, and it's not that many years since then the real acceleration, I think, came in the great financial crisis.
So a downturn like this could be the second making of Vertu Motors.
Well, I think it presents opportunities, and I think it depends what mindset you go into the battle with. And we intend to try and maximise as many opportunities as we can.
Robert, let's a little look at the highlights for you of the results. I mean, what would they be?
Well, I think the fact that we actually generated increased operating profit in quite a turbulent period, actually, forgetting the virus for a second. We saw a first half with volatile used car prices. We saw Brexit uncertainty impacting the consumer. I think we saw confusion in the consumer's minds around powertrains. I think the consumer got awfully confused about what to buy. And we had weak sterling pushing up prices. So I think there were a lot of moving parts, actually, which made the period difficult. But we increased our operating profit, which I think is testament to the strength of the group. So I think that's probably a headline. Our adjusted PBT was pretty level, and we absorbed some losses in that from the recent bout of acquisitions that we did from January. So I think that's a good start. We added 12 outlets in the period, expanding our franchise with Volkswagen. We've now got 36 Vertu branded businesses in the UK. Site is now a retail site with online retailing for our Vertu brands. And next month we'll commence TV advertising for the Vertu brand, and we see that as a good opportunity. I think the systems work we've done over the last 12 months, and actually particularly during the furlough, I've been delighted with. We've really worked hard and sprinted fast. We launched about the 15th of May across all the platforms a new pure online retailing functionality. We'd had it since May 2017, but it had been relatively muted in terms of impact. But since the 15th of May, when we launched our new online retailing capability, we've done 40 pure online deals with no human involvement at all, and done 69 reservation fee transactions on top. So, 109 deals where the customer's pretty well transacting on their own. So I think in half a month, that has got to be seen as a victory. And that's half of the story on digitalization. The other half of the story is the work done on robotics and increased productivity and efficiency, which means we can become more efficient and reduce costs. And I think it would be fantastic in this margin constrained environment if we could actually be so productive and so efficient that we could materially reduce our cost base, to giving ourselves a competitive advantage. And other sectors have done that over the years, and I think we've got that in our sights.
What was new car performance like, Robert? I mean, forgive me if I missed it in your results, but I mean, how did they perform last year?
The what? Sorry.
New car sales.
I mean, new cars. I mean, the market was down, I think, in our period about 4.8%, and we were about 8.9%. This is in retail, so that was the weakest channel for sure, for very well documented reasons, I think. And some of our volume manufacturers certainly saw pressure with regards to currency and pricing. The fleet and commercial performance was unbelievable. Actually, really improved profitability. We're now making 4% gross margin, and actually 5 years ago we'd have made 2%. We saw fleet car volumes, including agency volumes, like for like up 16%, or more than 16%. And we're really getting some power and market share actually now in terms of fleet. And actually in the COVID period, we took 2,000 car orders for fleet in the lockdown up to the 23rd of May. So I'm very pleased with fleet performance or enhanced profitability. After sales keeps thundering on in terms of growing profitability year on year, aided actually by some internal charging increase that we charge the sales departments more. I guess the most pleasing thing in the results, there's lots of pleasing things, but the used car performance had all the potential to be very poor. Used car price falls in H1, consumer confidence low, and we charged the used car departments 2.9 million more in internal preparation charges, and in terms of the rates we charged. And actually we came out with gross profit 0.3 million down, which was a stunning performance. A stable margin, stable volume, absorbing all those extra costs. And it's hard actually to explain, but I think we did it in terms of very strong marketing campaigns, increasing the speed of used car stock turnover, being very brutal with regards to stock management, and we will have to be again actually in the next couple of months. And that helped us to sort of remove ourselves from the fray and the margin erosion that the rest of the sector saw, or certainly pockets of it.
And thank you for that, Robert. I mean, with the new car sales going forward, that's clearly going to be a little bit more challenging, isn't it, with the current situation? I mean, what are your hopes for recovery?
Well, to be honest with it, I have no idea. I think there are far too many uncertainties to make any great bold predictions as to where the market is going, and we'll just have to wait and see. In terms of new cars, I've no great visibility as to around how quickly production will ramp up and we'll get supply. I think there's a lot of supply stuck in ports, so I think the short term is secured, but the medium term, I don't know, if I'm honest. If that supply comes, I expect the manufacturers to be aggressive with regards to offers and consumer offers to get the whole thing working. If that goes to a degree above normality, that then could put some pressure on used car residuals, and we have to be mindful of that. We've then got, is there going to be a government incentive program? And we've absolutely no idea, but that could make a material difference in the market. And the market, without an incentive program could get as low as 1.4. I think this year. With an incentive program could be higher, but there's no point speculating a lot. I can't really do anything about it. We've just got to do the job on new cars. I've actually been quite pleased with how new cars have been this week. We've come out quite strongly, and we have been increasing the number of new cars we've sold over the last few weeks. It started off 99% in the lockdown was used car demand. It has balanced itself out, in fairness.
Robert,
And then you've got the economy, and I'm an amateur economist, I guess, to some extent, and I have no idea. So we'll have to see.
Certainly going to be an interesting few months ahead. Just a couple more questions for you, Robert. Have you got any idea of what the impacts of this lockdown has had on the business and how long it's going to take you to recover? Because clearly very strong set from last year, but I mean, what's this year going to look like? Have you got
in the announcement, we actually were very transparent, and we actually gave our monthly profit figures. So in March, we made 5.8 million profit. We normally make, I would have said we should have made 11 or 12. Clearly a big impact there of the lockdown. I mean, the last week of March, as you very well know, is actually the busiest week of the entire calendar of motor retail. So it was unfortunate timing. April and May, I think we did a good job in terms of cost control and also opening service departments. We opened 98 service departments during the lockdown, increasingly bringing customers in, bringing resource back. And we've calculated it, and it was not only morally right to actually open our service departments for key workers and essential organisations and bands and things, but actually it was the right thing to do financially. Our losses were reduced, our cash generation was increased as a result of that strategy. However, we still lost, combined in April and May, £20 million, which is a big number. And I think we did our best at curtailing costs and managing our way through that. As we get into June now, clearly in England, we're open. I'm sitting here in Newcastle Honda, and sales have been good this week. We did 450, I'm talking retail, not fleet, retail deals on Monday. We did 411 yesterday. This could be pent-up demand. People could say it's a flash in the pan. It might be a flash in the pan. The bottom line is, if we'd have sat and opened the doors on Monday morning and nobody had come in, or we'd have sold 200 cars, we'd be feeling a little bit different. So let's just take the positives as to where we are. I'm pleased with where demand is. I'm exceptionally pleased with where service is. I mean, we've had 2 days now of record service bookings. We have never taken as many service bookings in 2 days as we've seen the last couple of days. So I think there are some positives out there. We've clearly got to be cautious around resource and making sure we don't assume all is well and then find that in 2 weeks' time it goes down, and that is clearly the risk. So, I mean, financially, I mean, if you'd said to me 6 months ago we'd have lost 20 million quid in April and May, I'd have scratched my head, actually. But that is the truth.
Do you think you'll be able to turn that around and make a profit this year, Robert?
Seasonality is not in our favour, I would say. And we've withdrawn all guidance to analysts and investors. I think there's far too much uncertainty for us to provide guidance at the moment, and I think that follows what other companies are doing. I am making no rash statements given the level of uncertainty as to the ability to turn around that loss. I think we'll just put our best foot forward, be very clinical in terms of what we're trying to do, execute very well, and produce the best result we can.
And I noticed you cancelled the dividend for this year. Do you think that should have been deferred?
Well, we cancelled the final dividend. We actually did pay an interim dividend actually in January.
So was there any thoughts about deferring that rather than cancelling this one?
No. It's an entirely semantic debate, that, isn't it, really? What's the difference? What's the difference between deferring it and cancelling it? We can always declare dividends in the future. Makes not a blind bit of difference deferring it and cancelling it.
Fair point. And finally, what are your hopes for the future, Robert? I mean, what would be your positive note to end on?
Well, we've got a strong business. We've got excellent, stable management teams. The morale is sky high, absolutely sky high. They are people in the dealerships know they're in a tough place, but want to come out fighting. I sent all our management this morning the speech of Henry V before Agincourt in full Shakespearean lingo. And I think if we maintain our discipline around the basics of the sales process, absolutely making sure our customers get a fantastic experience in difficult times and with constraints, then we will be successful. We've got very successful partnerships with manufacturers. The manufacturers are helping the sector no end at the moment, as are other suppliers actually, and the whole sector's worked much better. The relationship between the manufacturers and the retailers and the role of the NFDA has been much better than I could have imagined actually. So I think there's a lot of positives to take out of this, and we've all, and as you have, I'm sure, learnt new ways of working. This business no longer works on a 30-day timetable. I do not have an operational board meeting every 30 days. We have an operational board meeting every 36 hours. I have a marketing meeting every morning. The whole business is being run much, in my opinion, with more innovation, with more urgency and more momentum. And I think that's a good thing.
Robert, it's been an absolute delight to chat to you this morning. Congratulations on last year, and I wish you the best of luck in turning things around over the next few weeks.
Thanks very much. Thanks for your time.
Thank you, Robert.